What happened in 2008 is not a financial story, not an economic story. This is a crime story, and we are not nearly pissed off enough about this. Here's an example of the type of thing that was happening leading up until 2008. So, Wells Fargo, you might have heard of them. They systematically targeted black communities with predatory loans. Wells Fargo called black people mud people and called the type of loans they were giving to them ghetto loans. That's what they were saying. This is documented. You could find it on the New York Times. They reported on this. They called them mud people and they gave them ghetto loans. So here's the type of thing that was happening leading up till 2008. These loan officers from Wells Fargo would be strolling along in the neighborhood, knocking on doors, saying, "Hello, sir. Would you like to refinance your mortgage and save a few $100 a month on your mortgage payments?" And these unsuspecting, a lot of the time uneducated folks, they wouldn't know any better, and they'd say, "Well, geez, sir, that sounds real nice. Yeah, I sure would like to refinance my house, whatever that means. If I could save a couple $100 a month, yeah, I'd love that. I could definitely use the extra money." In the best case scenario, they were being deceived and not being told that these were adjustable rate mortgages. But there were even allegedly some instances of these loan officers falsifying documents to hide the fact that they were adjustable rate mortgages. Meaning, during the time period from 2001 until 2006, mortgage rates were very low. The Federal Reserve had rates at 1% because of the dot-com bubble, because of 9/11. So they were trying to juice the economy. They're trying to stimulate things. So mortgage rates were all the way down to 3%. And that's what these people were refinancing their loans at. They were going down from like 5% to 3%, saving a couple $100. But we're not told that when these rates changed, their payments would change also. So in most situations, these people would experience a $1,200 to $1,500 per month increase in their rates when the Fed started hiking rates. And they were shocked. 3 million home foreclosures by 2008. And these bankers, the most filthy, disgusting, soulless creatures on earth, they were even getting the pastors at local churches to encourage the people in their community to take out these types of loans. Now let me give you a lightning fast, super simple rundown of exactly what went wrong here, what led up to this mania that led to 3 million people losing their homes. So there's really two things. One of them was the repeal of what's called the Glass-Steagall Act. This is an act that goes way back into the 1930s that was put in place after the Great Depression. It basically meant that commercial banks and investment banks had to be two separate entities, meaning you cannot use the deposits of bank customers to make investments. All right, I know it's a crazy concept to think that bankers were taking your money you deposit to make risky bets with them, but they were doing that leading up to the Great Depression, and they were suddenly allowed to do that again after 1999, when after heavy lobbying by all the big banks, by Citigroup, by JP Morgan Chase, by all of them, even by the Treasury Secretary, Robert Rubin, who formerly worked at Citibank. Now, this was lobbied forever. Like, this was the ultimate dream for these big banks, mostly led by Citigroup. They spent over $300 million lobbying to repeal the Glass-Steagall Act, and they finally make it happen under Clinton. This guy, Robert Rubin, we'll hear about him later. He was the acting Treasury Secretary under Clinton, convinces Clinton, "Hey, let's do this. It'll be good. It'll juice the economy." And so, after they repealed the Glass-Steagall Act, the top 5 banks in America immediately have control over 40% of the banking assets in America, up from 25% just 10 years prior in 1990. And today, it's much worse. Fun fact, in Whitney Webb's book, One Nation Under Blackmail, which I'm going through in my book club right now on Minnect, link below, Leon Black mentions in 2020 that one of Epstein's clients had formerly been the U.S. Treasury of the Secretary, indicating that could have been either Larry Summers or Robert Rubin. I know the mind goes in all kinds of crazy directions, but we shall not speculate. So the Glass-Steagall Act repeal is one part of it, and then another part of it is that at one point in time, these adjustable mortgage rates were illegal because they're dangerous and misleading, and the vast majority of people would know absolutely nothing about finance or interest rates, probably by design because school sets us up to be slaves, not successful people. But under Reagan, there's a big deregulation push, so Congress ultimately rules that we can, in fact, start using these adjustable rate mortgages to sell these type of products because it's a sales pitch. You know, when rates are low, people want to spend less on their monthly mortgage, and here you go. Here's an adjustable rate mortgage. You pay less now because rates are low. But when rates go high, you get screwed. And they tend to hide the painful part of that when they're doing the sales pitch. Now, when it comes down to the crimes committed by these banks, I literally have 7 pages here worth of crimes that were committed by the banks or things that could be interpreted as crimes. But instead of reading that TL, go through the broad strokes. I mean, you got HSBC that laundered $800 million worth of illegal cartel drug money through their bank, slap on the wrist. You got Goldman Sachs, who was selling bad subprime mortgages to their customers, then betting against their customers. You, of course, have Wells Fargo with their ghetto loans to the mud people, as they call black people. We mentioned that before. You got Citigroup, who's hiding $45 billion in toxic assets, and Bank of America, who misrepresents the quality of their mortgage-backed securities. Another very interesting fun fact is that Jeffrey Epstein might have started the crisis by accident by pulling $57 million from his Bear Stearns account, which might have triggered their 17-to-1 debt ratio exposure. Just maybe. And we can't wrap this up before we hit AIG, the one who was insuring all these credit default swaps. So, the credit default swap is basically insurance against your loan going bad. So all these bad loans were insured by AIG with the credit default swap program, but it was a crazy garbage situation that didn't really reflect true insurance. Don't want to bore you with those details, but what I do want to tell you is something that's very interesting that I found, again, from Whitney Webb's book that we're reading in my book club down below. Click the link if you want to check that out. Did you know AIG's founder was in the OSS? Yeah, it was founded by an OSS operative named Cornelius Vanderstar. He did this whole crazy thing where basically offshored reinsurance to hide its risk exposure in Barbados. So AIG, Goldman Sachs, intelligence agencies, they were all up to some shady shit. Well, at least they were held accountable, right? No, wrong. They were actually rewarded. They were given $700 billion to split amongst them from the taxpayers. But it wasn't just given to them as a gift. The Treasury Secretary, Hank Paulson, who formerly worked at Goldman Sachs, said to them, "Hey, you're going to fail if we don't give you this money, so you say. So if we give you this money, it's to stimulate the economy. So we expect you to give out loans to small businesses if we give you this bailout." Okay, fine. It stings. It's annoying for us to do so, but we give it to them. And of course, they go out and, give these loans to small businesses, help stimulate the economy. And that's ultimately what got us back up and better than ever. So we wish. Unfortunately, that's quite the opposite of what happened. In reality, what happened was they were given this money. They didn't give out loans. They actually reduced the amount of loans they were giving out. And all the bank CEOs gave themselves huge bonuses and just sat on the money. Not joking. So they siphoned off hundreds of billions of dollars from us after lying to us and stealing from us, defrauding us, using their ability to create money, transfer wealth, and they got richer because of it. Do you want to know how the Federal Reserve rolls when we're in times of crisis? So I heard this in a book one time that when people were panicking in 2008, when they were going to the bank trying to withdraw their money, they called this a bank run back in the day. What the Federal Reserve did, they started printing money and intentionally, strategically, they made sure they had these big pallets of cash wheeled in to the banks at lunchtime. When there were long lines of people, roll the money in slowly, don't conceal it, make it very visible. Tell the cashiers at the bank, count the money extra slow, take your time. Say, there's more than enough money here. Don't worry, folks. Give out the money, nice and slowly. Keep the people waiting. Make it very visible. And eventually, they'll get tired of waiting and see there's nothing to worry about because we have plenty of cash to give out. And so they pacified the population adequately. And then Obama comes on saying, "Oh, I'm going to change the system. I'm going to hold people accountable. Yeah, it's time for Main Street. Wall Street's has turned. It's time for Main Street." Weird thing for somebody to say who we find out was having his economic positions filled by all Citigroup people. Literally, 5 people from Citigroup all had very high-ranking economic positions in Obama's administration. So Obama's Treasury Secretary was a very close friend of Timothy Geithner. So these WikiLeaks emails come out and show this guy named Michael Froman, who worked at Citibank, he was an executive, becomes a key economic advisor to Obama. Basically shapes his administration from an economic standpoint. So you had at least 5 people in Obama's administration that either worked directly for Citigroup or worked with somebody who worked at Citigroup and was close with them, meticulously shaping their economic policies. There's even been people who called Obama the Citigroup presidency. And remember the last episode when we talked about who owns the Federal Reserve? Citigroup is the biggest shareholder in the Federal Reserve. And then we looked into who the biggest shareholder in Citigroup is, and it traces back to the Rothschilds and the Rockefellers. So there you go. What does that freaking tell you? The Rothschilds could still be siphoning off the money of the American taxpayers. Well done, you freaking vampires. You are still extracting the wealth of America to this very day. I don't know how you do it, but each freaking generation of these these people keep on doing it. Insane. I made this video because someday we're gonna have another economic crash. What feels like a crash, what feels like something we have to respond to, that we have to stimulate. Guys, we cannot keep throwing money at economic crashes. Why? To bail out who? Every time it's to bail out the freaking big banks or big hedge funds that screwed up and made bad investments and bad bets. We can't keep centralizing the gains and socializing the losses. That's why there's a wealth gap. So if we have a 50% stock market crash over the next year or two, we cannot let Trump do a bailout, do a stimulus. No.
And a lot of people don't want to give them $1 trillion to reward them for doing a bad job.
No more. No more. We cannot tolerate it. With that said, we're going to be talking a lot about topics like this in my book club down below. I think you click right here if you want to join. You click down here in the description if you want to join. I'll pin it in the comment section too. Cannot encourage you enough. If you want to learn about economics, you want to learn about history, politics, military, technology, you name it. You will learn about all of it in the Forbidden Book Society on Minnect. Link below. If you want to know who owns banks like Citibank and JP Morgan, click right here. Much love.